Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Tesla, ticker symbol TSLA. And so here I am recording this on Sunday, April 6th, after Tesla closed on Friday, April 4th at a price of $239.43, being down nearly 10.5% on the day, and then continuing lower by about $4 into the after hours trading session, ending it at a price of $235.25, or being down 1.75%. And so, I wanted to follow up on the stock here because I think it's getting into, dip buy-in territory, especially considering that just a few months ago it was nearly at $500 a share. And so I am excited about that and just wanted to talk about some levels with you guys. And also on the note of bottoming signals, we did get a pretty big one on Friday, April 4th. Tim Waltz talking about the economic crash that's been so bad with all of this red. And, so I'm saying that he's like the Kramer 2.0 bottom indicator, and that he is an inverse indicator, and that, we might be seeing a bounce on Monday, or, maybe it's starting Wednesday next week. So, I'm really excited about this Wednesday, this coming week, I should say, not next week, this coming week. And so here, just looking at the levels on Tesla, one thing, really stands out to me to the downside is this blue dashed line. There is a gap that may get filled at $213.65. But I should also note there are some other gaps back here that would be, around $150 a share that have not yet been filled. Maybe they never get filled. But there is always the possibility that we head lower than 213.65. So did just want to mention that. And then zooming in on the chart, we can see that here on earnings day, so October 23rd, Tesla closed at a price of $213.65 before gapping up. And so that is the level that I have drawn there. And also, you guys might notice it. I do have an alert over here. I actually don't know where it's alerting at, what level. And so I have that at 229. Okay, so that's good to note. I think the reason why I have it there is because I have a pretty small position, but my average is right around 229. So just want to keep an eye on that. And I would like to be adding more below my average. So that is something I will be keeping in mind. But I actually might, let's see. Actually, no, I'll just leave that alert there, and maybe I'll nibble a little bit before it comes down to 213, then, maybe get a little more aggressive there. Anyways, also do have this other alert at 325.10. Not really sure why I have that there, and I might just delete that one just to kind of keep this looking a little bit cleaner. But I did want to point out some levels to the downside as well. Got, yellow and green kind of symbolizing, yellow's above green. So maybe a cautious dip buying level there. But green, I think, would be, really solid support. So potentially very good to be dip buying if we do get to those levels. And so just really taking a step back to see where this yellow downtrend originates from. That goes back to the all-time high at the time from November 4th of 2021. And then the other pivot point being the high from July 19th of 2023. So that was some notable resistance, as we can see over here. Did get multiple tests of it, rejected from it both times. This was in January 2022 and then again April 2022. So yeah, that seems like a pretty notable level. We also got effectively rejected from it here. This was December of 2023, and then did get a little fake out break above it here before breaking back below, rejected, and then finding our way above it to then, start to form that gap following earnings on October 23rd, 2024, before going up from that level. Let's see. 125%. So I think that if we do return to that yellow downtrend, that could be corresponding with maybe earnings, which looks like it's coming up on April 22nd. Maybe we do pull back to that level, which would be right around 180, somewhere around there. But we also do have this green uptrend, which I have to go back kind of far in time to point out where that originates from. And so that is actually the pandemic lows, so the lows of March 2020. That is the beginning of that trend line. And then if I just scroll forward, we can see the next time we revisited it was at the beginning of 2023. Got a very nice bounce from that green line up to that yellow line, which represented, a almost 200% move over the course of, 200 days, just about 200 days or so. So, pretty nice bounce from there. And as of right now, we would see basically a convergence of those levels in June, sometime around mid-June, and that would be corresponding with a price of around 170. So if we do break below 213.65, if we do head sub $200, I would look for support around 170, somewhere around there, maybe 169 or up to 180, corresponding with the yellow trend line here, maybe corresponding with earnings on the 22nd. And then also did want to point out this orange uptrend, which, did mark the beginning of this very nice dip buying level here around 139, somewhere around there, the low of 138.80. And so from that level, which was hit on April 22nd of 2024, basically a year ago, I do connect that with, this has to be the low of August 5th, when markets gap down, pretty notable level there. And so from that uptrend, did, all of these levels converging here, very, very notable to be seeing that, and that being a very nice technical dip buying level before this massive rally higher. And so, that level is now above us. We did get rejected from it multiple times over here just recently. So that is going to be one for us to be breaking above with some strength, but maybe we see a continuation of the downside before earnings, maybe getting to 213, maybe getting to 200. Don't really know, but I am excited to be able to be picking up some shares below my average. So I'm excited about that. And I also did want to, before closing out the video, put up a Fibonacci retracement here from this level of, let's see, 138.80 going up to the high here of 488.54. I do just need to adjust this. I don't know why it didn't go to the low there. And so that should be a low of 138.80, high of 488.54. So that does look good. Miraculously, we do have the 786 going right through this cross section here. That does correspond with a gap fill. So that is pretty impressive, I must say. That's pretty cool to see that 786 at 213.64 being 1 penny off that gap fill. So pretty neat there. But maybe we don't get all the way down to the 786. Let's just keep an eye out where the 618 is, which I suspect will be above the current price. So that might, not necessarily be acting as a level to suggest as support, but maybe that would be acting as resistance, as it does correspond pretty nicely with this orange uptrend. And just being kind of general, that is around 272.40. 269, gotta have fun with the numbers. But yeah, generally, I'm really excited that Tesla's coming back here, because I don't know about you, but over the past month, really, from December, and especially with all the stuff going on around the country, and just, believing in electric vehicles and the technology that Tesla is putting out there, and that they have really just been trailblazers with all of this technology. I was just watching some of the movie Who Killed the Electric Car, which is about GM's EV1. And, they trashed their own vehicle. They destroyed their own vehicle because it was competing with the oil industry. And Tesla was able to disrupt that. Tesla was able to bring EVs, autonomy, all of that to the automobile marketplace. And I just think that there's so much potential for Tesla with Optimus, with robo taxis, and all of the stuff that they are developing, the jobs that they create in the U.S. So over the past month, my conviction in Tesla has only grown. And I am just really excited about it. And let's see, I was thinking maybe I should, is there any kind of divergence here? We have, let's see, higher lows. So that's good. And in the RSI, we have lower lows. And so that is, let's see, not hidden. Yeah, that's hidden bullish divergence. Bullish divergence would be lower lows in the stock price, higher lows in the RSI. And what we're seeing is the exact opposite of that, where, just from this low over here, from March 10th, RSI was 2059. And that is when, the stock price was hitting, lows of 220, right around 225 when Tim Walz was trashing Tesla, kind of marked the bottom there. And that's when we were forming hidden bullish divergence, because if we do go back in time, these lows were lower than this low, whereas the RSI relative to this one were higher. So higher highs in the stock price, higher lows in the stock price. Hopefully I said that correctly. And lower lows in the RSI. That is hidden bullish divergence. And so, and I guess with that being said, the low over here was 217.02. So maybe I want to add another alert, and I will do this below. Let's see, 217.02, because then that would be kind of like, a danger alert that we are starting to put in lower lows. But if we start to put in lower lows relative to that, relative to 217.02, and RSI is above 2059, or let's say 2449, because that's when it was on the day that we hit this low in the stock price. If we're above 30 in the RSI or above 25, then that would be higher lows in the stock price. And that would also be higher lows in the RSI. So if we actually dip below those in the RSI, then that would be bullish divergence. But generally, I guess one thing to be kind of cautious of with this, because we have seen this downside move and this consolidation, maybe we're looking at a bear flag formation. And so just taking this Fibonacci extension from that all-time high to this recent low that we hit, that was at 217.02 or whatever I was just talking about, and then going up to the high at 217.02, and then going up to this high, which was 291.85. From that, we adjust the axis here, we can see that the 100% Fibonacci extension from there would be suggesting a price of $20.38. I don't see that happening, so I am just going to delete that. I think that the real dip buying opportunity is going to be around 213, 214, and if it does go any lower, I think that's just an extra special discount. So I'm really excited about it. But anyways, that's enough rambling and sharing my thoughts. As always, if you did enjoy them, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Have a great rest of your weekend. Take care, you guys.